Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, the latest Infometrics economic forecasts are out, and really we're starting to see maybe some of those green shoots. We've talked before about a soft landing, but perhaps now we're starting to get a bit more confident about the economic outlook.
Yeah, look, going through the forecast process this time around, our starting point was a similar picture to what we were looking at back in October, but going through the process, we've come to the conclusion that, look, inflation is moderating more quickly than we'd previously anticipated. That's good news, of course, in terms of interest rates, and we've brought forward the timing of our expectation around the first cut from November this year forward to August, so 3 months earlier than we were previously thinking. So inflation coming under control. There's still some inflationary risks there that we can talk about later, but at the same time, we've also revised up our expectations for economic growth over the next couple of years as well, particularly later into 2024 and through 2025. And one of the real keys to the whole picture is just around how strong migration is at the moment. Now, that's of course created some demand side risks as all these people come into the country and spend more money and want to buy houses and have to live somewhere. But probably more critically at the moment, what we have really clearly seen through the data is that there is an easing coming through in the labour market. So those real critical skill shortages, those capacity pressures that have plagued the economy through the pandemic with the borders being shut, those are definitely easing now as all these extra workers come into the country. And so one of the sort of key risks around inflation we think is subsiding. That is slower wage inflation we think will come through in 2024, and that helps to take some of those cost pressures out of that sort of business place that businesses were struggling with over the last couple of years.
I mean, that's certainly a much brighter outlook, but also sort of purely driven by that population boost. You know, you're having at the moment 130,000+ people that have come into New Zealand over the last year. All of those people, are still buying things. They're needing to resource their lives. You're seeing that in terms of boosted consumption, and certainly going forward, we've had to lift up our expectations of just how much that sort of consumer spending, private consumption looks like because of it. If you're a business and you're seeing those better sales, you're also, of course, having to think more about business expansion and a bit more investment. So again, being encouraged. And if you can get that inflation moderation coming through, then again, that sort of spurs on more activity as well. So, I mean, that all sounds fairly rosy. Are we out of the woods then economically, or are there still sort of some storm clouds, some disruptions that are going to risk that sort of economic outlook that we've got?
Yeah, look, firstly, there's still some inflationary concerns. You look internationally with the conflict in the Red Sea at the moment and the effect that's having on international shipping costs. Look, they're nowhere near as high as they were during the COVID pandemic, when shipping was incredibly disrupted by what was going on there. But it is something that just is, giving us cause for concern, and maybe does start to become an inflationary problem in a couple of quarters' time. Something to keep an eye on, and indeed just how much domestic inflation continues to slow. We know that a lot of the slowdown in broader inflation so far has come through from lower tradables prices, lower import prices, as a reflection of slower global inflation with a fairly weak world economy. Speaking of that world economy, from a New Zealand growth perspective, also got to be concerned about just the sort of ongoing slowdown in China in particular. We've seen the construction industry there hammered over the last few years, and this sort of Evergrande collapse has been right at the sort of sharp end of that. That's hitting the forestry sector and forestry exports. Forestry prices are well down. But we've also seen weaker demand through the Chinese economy impacting on the likes of our dairy exports, our meat exports, and prices for both of those have been weaker over the last 6 to 12 months as well. So looking forward through 2024 and into 2025, still concerns, I think, about just a growth in some of those provincial, agriculturally focused regions across New Zealand. They were great performers through the pandemic when everyone still had to keep eating and we were selling stuff around the world. But over the next 18 months, I think conditions will be tougher for them. Profitability across the agricultural sector will continue to be squeezed, and so that will sort of limit the growth in many of those provincial regions over the next year or two.
Absolutely. I mean, you look at the likes of the lamb price now at sort of a 7-year low, and a lot of that's because you're seeing additional supply coming into the market. It's just that there's not additional demand to soak it up either. I mean, you look at the likes of the Chinese economy, population growth, negative now for the last 2 years, the worst since the famines in the 60s, as well as that you've got high numbers of younger people that are out of work. And again, if you're out of work, difficult to keep buying like you did before. So definitely some of those sort of global risks continuing to emerge and out of our hands, but definitely have a big impact, not only on the economy at large, but like you say, provincial areas and certain industries and sectors as well. We'll continue to monitor how all of those economic trends develop, how inflation moves, how big or not migration continues to be, and what that means for spending and wider in the New Zealand economy on one of our future editions of Econ Talks.